To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
Morning, friends. I hope all of you are, doing good and you're, in line with your study plan and you're absolutely not wasting time, enjoying studying and enjoying life. So, with that, let me start off with, the doubts that I have received in advance. And once we clarify that, then we will move forward to a quick revision. And also my attempt will be, while we are solving the doubts which have been raised, if there are any common topics, which is also part of the revision, we will kind of, try to understand it together. So, the first doubt which has been raised by one of our friends is, sir, why do we use budgeted rate? Or, while calculating the fixed overhead rates, why do we use budgeted overheads and why do we use budgeted number of units? Also connected doubt is, why are we always, talking about absorption and why absorption and recovery rate is being used interchangeably? So why do we, call that? So, let me just give a background. So though it is also connected to the overheads topic, but still, see what happens is, as far as the direct material cost, direct labor cost, and direct expenditure is concerned, these are incurred in relation to the production of a particular unit. So there is a one-to-one correlation between what is being produced and the cost that is being incurred. All right. So because there is one-to-one correlation, it is possible for us to identify and it is possible for us to track the cost that is being incurred. But when we talk about overheads by their very nature are indirect. So, it's indirect expenses, indirect labor, and indirect material. Now, this indirect expenses are not in relation to one particular unit. It is in relation to the facility as a whole, or all the production, the entire production, the total production that we are going to do in that particular period, maybe a week, a month, a year, or so on. So what happens is, I am trying to understand how much of the fixed overhead or how much of the total overhead we have to charge or we have to recover or we have to attribute, or we can say how much we have to calculate and add for 1 unit of cost. In order to do that, I need to know two things. First, I need to know what is going to be my total overhead. All right. Second, I need to know how many number of units we are going to produce. What is the level of activity that we are going to achieve? Or what is the quantum of production that we are going to carry out. Why do we need these two things? We need these two things because we need to calculate the rate of recovery. We need to calculate the absorption rate. So we need a numerator, we need a denominator. So the numerator is the total amount of overhead. The denominator is the number of units. All right. Now the catch here is I will know the exact amount of the overhead that is incurred and the exact number of units that have been produced only at the end of the period. So on day one, I will not know exactly what are the total number of units that are going to be produced in this month. However, there may be a possibility that I am producing, a certain number of units on the first day, and maybe by the second day, it is already out of my factory for, gone out for sales. It is already given for selling and distribution. So it is important for me on day one itself to kind of have an approximate number, a reliable estimate of how much overhead has to be charged to the product so that it will give us a more reliable costing number and we can take informed decision as far as what should be the selling price of the product. So it will help me in pricing the product and making all the strategic decisions. So for us to know on day one the next best, or rather the best alternative available, is to make an estimate. Now, what are the estimates that we are going to make? We are going to make the estimate of what is the planned, what is the budgeted, what is the estimated. So, you can use these terms interchangeably. What is the estimated overhead for the period? What is the budgeted overhead for the period? Budget is nothing but an estimate. So we will budget what is the estimated overhead, and we will also simultaneously budget what is the estimated number of units that we are going to make. So this is our plan. This is our budget. This is our forecast. This is our, estimate for the month or the year or the period, whatever we are considering. Now, basis on this estimate, at the beginning of the period itself, we are going to calculate something called as budgeted fixed overhead rate. Why are we calling it as budgeted fixed overhead rate? Because it is based on the budget. Now, you call it budget or you call it estimate, it's one and the same. So sometimes it is also called as estimated fixed overhead, an estimated number of units, or estimated fixed overhead recovery rate. Or for sake of simplicity and in common parlance, we simply refer to it as fixed overhead recovery rate. And it is a given fact that this fixed overhead recovery rate is only estimated. It can be estimated, and estimated only, because we are using estimated expenditure and estimated number of units. But sir, if these are only estimates, what do we do with our actuals? Our actual fixed expenditure, actual overhead expenditure can be different. The actual number of units can be different. That's absolutely right. Or rather, in 99 out of 100 cases, the actuals are going to be, different from the budgets. That is where we have the concept of over absorption and under absorption of overheads. So because our actuals are different than the estimates or the budgets, it is going to be called as over absorption, under absorption. And this over absorption, under absorption, usually we charge it off to the costing PL. So, I think I have answered that question. So in case, Nassam, if you are having any further doubt in this relation, maybe you can, ask so that we can clarify it.
Sir, in case of cost sheet, like how we are using this fixed overhead recovery rate in cost sheet and all. Like I have not seen in cost sheet that we are not using any fixed overhead recovery rate and all.
All right. See, typically in our level, at inter level, what is usually happening is they are giving us a question either on overheads, or they are giving us a question on cost sheet. So when they are usually giving us a question on cost sheet, what they usually do is they kind of give you the numbers. So they directly say this much is the overhead, this much is the material cost, etc., and we add it up and we arrive at the cost sheet. But if we were to prepare a cost sheet, let me just pull up the cost sheet, all right, for you. So when we are preparing our cost sheet, the first part is going to be your direct material, direct labor, and your direct expenses, which is typically going to be your prime cost. As a next step, what we do is we add our factory overheads or work overheads. Now, when we are adding factory overhead, work overheads, see, there are two types of overheads: variable overheads,
fixed overheads.
Is that right?
Yes.
The variable overheads are going to be added on the per unit basis. So if something is varying on a per unit, we will calculate that and we will add on a variable basis. But if something is on a fixed basis, then what we are going to do is we are going to calculate the fixed overhead recovery rate as a separate working. So we will assume, okay, if 1 lakh rupee is the budgeted overhead for the period, and 10 are the units that we are going to make, then we are going to calculate the fixed overhead recovery rate as 1 lakh by 10,000 rupees, 10 per unit. And at that 10 rupees per unit, we are going to absorb. We are going to recover. So basically, fixed overheads, we are recovering and taking it to the cost sheet. Now, what we are going to add in the cost sheet in terms of the fixed overhead is going to be only this estimated fixed overheads that we are absorbing. It is not going to be the total amount. All right. And
Yes, yes,
whatever under absorption, over absorption we are having, that
yes,
under
yes.
absorption, over absorption will go directly to your costing P&L. So it will be more like after we get the profit, after we have arrived at the cost of sales, when we compare this with profit, there we will also deduct the what do you say, under absorbed and over absorbed overheads. So that is one thing that you need to understand. Also, when we are preparing cost accounts,
Yes.
all right. So typically, we are going to transfer the material cost, wage cost, and overhead cost to the work in progress. But the overhead cost that we are going to transfer to the work in progress account is going to be only on the basis of absorption.
Sir, can I ask one doubt with respect to this accounting for, yeah. Sir, why do we use this material control account? Or like when we see this kind of, in the accounting chapter, no, cost accounting chapter, we can see material control, like wage control, like control account. No? Why do they use this word control?
All right. So see, what do you mean by control? Let me first understand, from a layman's perspective.
Control, it's like, setting a standard and try it, and looking and trying whether this standard is achieved, or and finding out the deviations.
So again, you're talking in terms of costing. So as a layman, what is control? So it's basically trying to
I can say
keep a
that
tab, keep a
yeah,
tab, or keep a check, or keep
yeah,
some kind of account, or keep something in control, or
yes, yes.
under the permitted levels. All right. When we are driving a car, we say, please drive with control. So control meaning you have to control your speed, you have to control your direction, you have to control your lane, so on and so forth. So when we, talk about costing, here what we are saying is, see, every aspect, every cost item, some person is going to be responsible for that cost. So if we are talking about material, maybe the storekeeper is in charge of keeping control over the stock, and he is accountable for what is coming in, what is going out. So they have used that term as control. So in the material control account, we will have a complete tab of what is coming in, what is going out, or it is supposed to be that way. So it's more like a transit account. First we will park it in that account. It's more like a control account, and then we take it out from there. And not only that, Nissan, today the accounting softwares, the ERPs, etc., that are designed and that are being used widely. So even in that, you have a lot of accounts called as clearing account or control account.
Yeah, yeah.
Till it is not posted in the correct ledger, or till it is not, posted in the correct account, it remains in the clearing account or the control account. And ideally, the control account should be zero at the end of the period or the end of the day. So it's more of a, literal term and literal meaning which they have given. So someone is responsible for controlling the material cost. Someone is responsible for controlling the overhead cost, so on and so forth.
Okay, sir.
So as far as your query on budgeted overheads and, why we are using budget and why we are using
Recovery rate.
recovery, are we good with that?
Yes, 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 sir. Sir,
Yeah.
the recovery rate means, sir, sir, in absorption, that word is also meant as recovery, no? Because that will be included in the cost of the product and all of that.
See, fixed overhead recovery rate is nothing but the rate of absorption. You're absorbing, you're recovering. These are interchangeable terms. So
Okay, sir.
talk about ABC. ABC is also nothing but a way of recovering overheads, a way of
Yeah, yeah.
recovering the overheads. Or we
Okay,
talk
sir.
about overheads. So these are all same.
Okay, sir, fine.
And sometimes, students also get confused between the term budget and standard. All right. See, when we are forecasting and when we are at the beginning of the month, and if I'm saying my plan for this month is to make 10,000 units, All right. That means the budget and the standard is 10,000. So in the question, sometimes they give only that. They use the term interchangeably. But if they have said, look, at the start of the month, the budget was 10,000 units. During the we have made 8,000 units. That means actuals are 8,000. Then what we will have to do is we will have to create something called as a standard. Now, standard is always going to be for the actual number of units produced. So what we will do, we will go to the budget. We will see, okay, for 1 unit, we require 10 units of raw material. For 10,000 units, we would have required 1 lakh units of raw material. That is the budget. But since we have made 8,000 units, as per the budget, we should use 10 per unit. So 8 into 10, 80,000 is my standard requirement. So budgeted requirement was 1 lakh, standard requirement is 80. Actual maybe 85 or 90 or even 75, whatever it is, and then we compare. But when we talk at the beginning, all right, when no activity has taken place, budget, standard, etc., all are used interchangeably in the questions. I hope that is clear. So what other doubt do you have, Nitham?
Sir, I have sent it some doubts.
Correct. So I am looking at one PDF which is on activity-based costing, where you're asking budgeted rate of each activity. In activity costing question below, why do we use the budgeted rate of each activity? So budgeted, what is your question? I didn't really understand the question.
Sir, in that case, in
Can you
activity
please tell me the question number? Which question number is that?
Sir, illustration 4.
Yeah.
Yes, sir. In this question, sir, if you look it up, in activity-based costing, there is no budgeted recovery. Whatever the cost of the activity, we are trying to distribute it on the basis of what they have given. So why do they still use this budgeted meaning?
Hey,
Budgeted.
let's look at the table.
Yes.
Let me read the question. So Hamara Apna Bank offers 3 products. The bank has selected 4 activities for a detailed budgeting exercise. So they are doing this as a part of a budgeting exercise. All right. The bank wants to know what is the product wise total cost per unit, so that the prices may be fixed accordingly. So they are talking only about the future. They want to do a budgeting exercise. The information is made available to formulate the budget. So again, what we are doing is we are formulating a budget.
Yeah.
All right. The cost that they have given is the present cost. And then they are saying how you should estimate it for the budgeted period. So they have given increase, change, no change, etc. All that detail. So the revised numbers, the revised estimates that you are going to get, these are all budgeted for the next period. So what we are going to talk about is going to be budgeted only. So that is saying calculate the budgeted cost, budgeted product cost. Okay.
Okay, sir, fine.
Yeah, so this was one, and then your next doubt was an absorption of fixed overhead. Why do we use budgeted and budgeted units? So that also we have discussed.
Yes, sir. One doubt with respect to cost sheet. Okay. Why expenses paid for administration of factory work is classified under the production overhead? Why not factory overhead?
Okay.
Expense paid for the administration of factory work. Why do we classify it under production overhead? Why not factory overhead?
All right. See, at a broad level, factory overhead and your administration related production overheads or administration related factory overheads, these are all going to go into the cost of production only. All right. But there is a slight difference. Now, what is the slight difference? The difference is in, the treatment of opening stock and closing stock. So we have 3 types of inventories. What are those 3 types of inventories or 3 stages of inventories? One is your raw material. Second is your WIP. Third is your finished goods.
Yes.
Correct. So when we talk about raw material, the raw material opening and closing gets adjusted in the direct material consumed level. All right, we add the opening stock, we deduct the closing stock. So only whatever is getting consumed, that cost is going into our cost sheet.
Yes, sir.
Right. Then we add your factory overheads. These are something which is in relation to the production. And this is not something in relation to your administration of the factory. So, for example, you have supervisor salary,
Yeah.
the floorman salary. Now, this floorman salary is not directly related to one unit, but it is related directly in a way to the production of all the units. So at one level, it is going into the entire activity that is being carried out in that production facility. But when we talk about, let us say, security guard salary, who is manning the production facility, now he has in a way no role to play with the production. But still, since he is maintaining the security of the production unit, in some way it has to be absorbed. So what we are saying is, look, someone who is who is involved in the production activity, that cost, which cannot be recovered on a per unit basis, let us include it as, in this step, that is the works cost or factory. See, the other name is works. So someone who is working on the manufacturing. So whatever is going into the work, let us include in that cost, and that effort has to also be incorporated in the opening and closing work in progress. So the WIP, something that is still in process, the supervisor or the floorman was involved in completing the opening WIP also. His effort has gone in the goods that were started and not finished during this period. So we adjust for that opening stock and closing stock of WIP. We arrive at the works cost, factory cost. Now, when we talk about these items, let's say quality control. Usually, quality control we do for quality inspection we do after the goods are produced and before they are sent out to the customers, before the sale is made. All right. So it is usually for the completed units. That is why we are adding this only after adjusting WIP. R&D,
Yes, sir.
R&D
Yes.
cost. Usually we absorb it on a per unit basis. So R&D cost we incur it, at the beginning of the product life cycle. So when we are designing the product, before we have actually started the commercial, we incur a huge amount of money towards R&D. And then we estimate what is the total number of units that we are going to sell of this product during the life cycle. We try to recover it from per unit. So we add R&D cost also based on the number of units that are produced, completed. In a similar fashion, the admin overhead, which is relating to production activity, we are saying let the finished goods absorb it. Let us not carry it to the next period. So that is briefly the thought process. And see, in a way, all of this, whether it is this factory overhead or points 10, 11, 12, 13, and
Yes.
14, all of them are going in cost of production only. We are not saying that it is not relating to production. Everything is relating to production, but the difference is whether we want to include that as a part of WIP or not. And because these costs are more to do with finished goods, we are taking it after adjusting for WIP. That is the only difference.
Okay, sir.
Next.
Fine.
Uh,
Sir, with respect to the cost sheet, there are so many points and details about each of this. Factory overheads, there are so many points, and with respect to selling overhead, so many different adjustments and all of that. So how can we memorize them in a logical way?
all right. So let me park that question. So once we start the revision, I will also take you
Yeah.
through that.
Okay. Okay, sir. No problem.
And so as far as the specific doubt fronts, I think we are good. So let me just start off with kind of going through the topics quickly and summarizing the revision. So when we talk about costing, basically they are direct expenses and then there are indirect expenses. So your direct material, direct labor, direct expenses, all of them combined together, we call it as prime cost, and we directly take it to the cost sheet. But when we talk about the indirect expenses, your indirect material, indirect labor, and indirect expenses, we combine all of them together. We refer to them as overheads. All right. Now, these overheads, we usually functionally classify. We call them either as production overheads, we call them as factory overheads, admin overheads, selling and distribution overheads, etc. And then depending upon the function, we either take it to the factory cost, the production cost, the admin overhead, and logically we try to kind of take it to the cost sheet. Even while trying to take the overheads to the costing, we classify whether it is fixed nature or variable nature. Variable nature, we will take it on a variable basis. If it is fixed, in chapter 4, the absorption, we have understood how we are going to kind of calculate the recovery rate. We are going to do the allocation, apportionment, reapportionment, primary distribution, secondary distribution, and then arrive at the recovery rate, how we are going to absorb. But friends, all of that is okay. And all of that is good, provided we are making only one type of product, or we are making multiple products, but these multiple products are kind of using the facilities of the production, the activity that is involved are equal. But imagine a scenario where we are making two products in a factory. Product A, product B. We are making 10,000 units of product A, 10,000 units of product B, but 80% of the factory capacity is being used by product A. Only 20% is being used by product B. Is it okay to recover the overheads on an even basis between product A and product B? Can I say A also 10,000 units, B also 10,000 units, let us recover equally? It's absolutely not fair. It is absolutely not reasonable. It is going to lead to wrong computation of cost. That is the only reason we have this chapter called activity-based costing. So the fundamental premise of this topic is, look, in a factory, where there are different multiple products being produced, there is a possibility that the different products are going to use the facilities of the factory differently. So we need to have that distinction, and instead of using one recovery rate, let's try to break it down further in terms of activity. Let's use multiple recovery rates. See, activity-based costing system, we are not going to get new overheads as such. What we are going to do is we are going to take the total overheads, and these total overheads we are going to distribute, we are going to divide, we are going to identify the various important activities, maybe those 4 or 5 important activities which have led to the incurrence of overheads. So we will identify what are the activities, we will identify how much cost we are incurring for each of those activities. So we will identify the activity, step 1. We will identify what is the activity cost pool, how much expenditure we are incurring for each of the activity. Then third, we will identify what is driving the activity cost for each of the important activity that we have identified. What is the activity cost driver? In chapter 4, when we were doing overhead absorption, we were usually using number of units as the base, or we were using the number of direct labor hours as the base of recovery, or the number of machine hours as the base of recovery. So we were using one single rate of absorption. Here, we will identify activity-wise fixed overhead recovery rate. So instead of one rate, we will have activity-wise rates. So at that fundamental level, whenever we are preparing a cost sheet between the traditional system of overhead absorption and activity-based system, the first part of the cost sheet, that is your prime cost, is always going to remain the same because this is directly attributable. But when we talk about overheads, in traditional system, we use only one rate for recovery. In activity-based system, we identify those activities and based on that, we recover. So here, what are the main steps that we have to do? Identify the activities, identify the cost pool for each activity, identify the cost drivers, the level of activity basically for each cost driver, that is step 4, and then we calculate the activity wise fixed overhead recovery rate. Once we do that, then if a product is using more activity, more of a particular activity or more of a particular resource, absorb more for that product. We try to recover based on the level of activity, based on the consumption of resources. That is the activity based costing system. So, this graphical illustration just summarizes. We have direct cost, indirect cost. Direct cost goes to the product or service directly. The indirect cost is usually going to go on the basis of some allocation. Under the traditional basis, we do it based on the machine hours. Under activity based costing, we do it on the basis of activity wise cost drivers. So friends, any doubt that you're having specifically in relation to this topic, activity based costing, you may feel free to ask at this point. So I don't see any query coming up, so I assume that we are good at this level. So one related topic in relation to activity based costing is your activity based budgeting. So while preparing a budget, if we take into consideration activity wise cost, etc., then the budget that is prepared on this basis becomes the activity based budget. What is the advantage of activity based costing system? It gives us a more reliable, more accurate, and more scientifically correct kind of costing.
Sir, doesn't costing operating income means operating profit?
See, operating income, operating profit, kind of yes, but
Yeah.
I mean, for all practical purposes, you can say it is the same. But this term operating profit is used more in service sector costing, and you would not come across this term usually in the other chapters.
Sir, because while solving the questions, they are like in some questions they are asking operating income. So like it was just like all those revenue minus costs and all.
See, once you are in a costing atmosphere, the costing period is itself your costing profit.
Yeah.
This is your operating profit.
Okay, sir.
So unless they specifically ask for financial profit, profit as per financial statements, that's a different thing.
Okay, sir.
Next is your cost sheet. Wonderful. Now, see, why are we learning this entire subject? We are learning this entire subject just to be in a position to determine the cost. So cost is any amount of money that we are spending. Costing is the process of ascertaining and determining what is the cost that we have incurred. Now, in order to determine and ascertain this cost, there has to be a specific way in which we, kind of approach this whole situation. Just like in income tax, we have, a particular stepwise procedure on how we are going to compute the total tax payable. So, we start with the 5 heads of income, we arrive at the total income, then we adjust for deductions, etc., arrive at the total income, and so on and so forth. So just like that, here also we have something called as cost sheet. All right. Now, see, when we are preparing a cost sheet, you have to keep two things. So when students ask me what is the logical way to look at it, you keep in mind two things. We have to do the classification based on function. So cost sheet is always prepared based on the functional classification. So we will have to identify whether something is going as a part of direct material, direct labor, direct expense, or is it indirect? And if it is indirect, is it in relation to production? Is it in relation to sales? Or is it office and admin expenses? So that functional classification is only going to help us in preparing the cost sheet. So this is one aspect of cost sheet. Second aspect of cost sheet is having understood the fundamental, functional classification, the order in which we are going to, adjust. Now see, at a very, very basic level, when we talk about closing stock, whether it is raw material, WIP, or finished goods, this is the only item which appears in my P&L and goes from one year to another. Let me simplify this. So, if I purchase some raw material in one financial year and don't consume that, then what will happen? The raw material which I purchased will be there on the debit side of my P&L as purchases, and that same amount I am going to my P&L as closing stock. That means there is debit, there is credit. So though it has come into my P&L, but it is having no impact on my P&L. Purchase is debited. If it is not consumed, closing stock is credited with that amount. And in a way, what is happening is cost of this period is going to the next period. So in terms of raw material, WIP and finished goods, whenever we are valuing closing stock and reducing it from our cost sheet, indirectly what we are saying is the relevant cost of this period we are transferring to the next period in guise of opening stock and closing stock. So we are just pushing that cost to the next year. So the idea is, if we are incurring anything in relation to the manufacturing or production of some unit, which is there in my closing stock, that associated cost also should get incorporated into the closing stock, so that on the matching concept, on the concept of matching principle, the expenditure and the revenue both are recognized in the same period. So we will take from current year, take it to the next year as openings, from the current year as closing stock, take it to the next year as opening stock. And if it is sold in that year, sales will get recognized. It will not be continued as closing. So the idea here is anything relating to production should in a way go to my value of closing stock, either at the raw material stage or the WIP stage or finished goods stage. Everything else should get debited directly to the P&L. So that is why we have cost of production, then we have cost of goods sold and cost of sales. So only the cost of production gets transferred to the next year in respect of closing stock. So when we talk about direct material, direct labor, direct expenses, and even your production and manufacturing overheads, these are all in relation to the goods produced and should form part of your closing stock. That is why we stop there, cost of production. And then admin, selling, distribution, R&D, etc. R&D, of course, we are going to absorb as a part of the goods sold in this year, but these are not going to get carried forward to the next year. All right. So let's, kind of in a way, look at the cost sheet. So the first thing that we do is we try to find out what is the direct material consumed. We start with the opening stock. We adjust for the, purchases for the year, and the closing stock of raw material arrive at what has been consumed. We take the direct labor, direct expenses. Of course, we cannot have any closing stock of labor with us. That is why there is no adjustment involved here. We arrive at the prime cost. Then, as we were discussing, while addressing the doubt, we add all your works and factory overhead, arrive at the gross works cost. We adjust for opening WIP, closing WIP, arrive at the factory cost. And once we arrive at the factory cost, this is more like, we have eliminated the impact of opening WIP, closing WIP. This cost is only in relation to the units completed. Then whatever cost of production that we have in relation to the completed units, such as QC cost, R&D cost, administration overheads relating to production activity, etc., all of that we are going to add here. And students generally tend to miss this one important point, which is the recovery by sale of scrap or byproducts. So see, what happens is, we have produced units. Let's say we have produced 100 units. Then we did our QC. During the QC stage, we found out that one unit is defective. We cannot kind of in a way use that product or sell that product, and we decided to scrap it. Then once we decided to scrap it, we will first have to ask ourselves, is it normal? So is it within the tolerance limit? If we know that, okay, usually 1% defective rate is acceptable and it is planned, then that whatever credit recoveries we have, what we are going to, kind of recover by selling that scrap, that has to get reduced from the cost of production. So that we are reducing. Then we have primary packing cost and secondary packing cost. Here also a lot of students make mistake. See, imagine the Lay's chips that you're eating. When you go to a Kirana shop and buy Lay's, he is going to give you only that 5 rupee packet, 10 rupee packet or 50 rupee packet, as the case may be, whichever you buy. But he is not going to give you the entire carton. When the shopkeeper buys, he will buy maybe 100 packets together. But we will buy maybe 1, 2, maximum 10. All right. So the packing cost of that one single chips packet, it is the primary packing. But the carton in which the shopkeeper gets 100 packets, it is the secondary packing. What is the distinction between primary and secondary? Primary is on a per unit basis. It is not for logistics. It is to be able to sell that one single unit. But that carton is a secondary packing just to facilitate transportation of 100 packets together. So it is not in relation to one unit. So primary packing we add as cost of production. Secondary packing, it is always a selling and distribution expense. So here we, stop at cost of production. We adjust for opening and closing stock of finished goods, arrive at what has been sold. All right. See, line number 15, this is the cost of production of the total number of units produced during the period. So let's say we have manufactured 1,000 units in the period. Not necessary that we sell all the 1,000. We may sell only 800. Then this 200 should get transferred to the. So we adjust for opening stock and closing stock. We arrive at the cost of goods sold. So basically, it is nothing but cost of production of goods sold. Then we, add all the other items. So till here, it is everything related to production. After that, we, just have your admin overheads, marketing overheads, selling and distribution overheads. We arrive at the cost of sales. So point 18 is the cost of making the goods that we have sold, and everything else is the cost of selling. So that way, once we do a functional classification, it becomes logically easy for us to remember.
Sir, can I ask a doubt?
Yes, please.
Sir, while I was solving the questions on this score sheet, I'm getting some confusion between whether it is a direct expense or a factory overhead on some items. So, sir, how can we get a clear classification?
So
how can we make sure that it's the direct expense and all of that?
It depends on the nature.
For example, So for example, higher charges paid for hiring specific equipment. I was thinking whether it should form factory overhead or but it's given under direct expenses.
See, one thing.
Yeah.
Moment someone says specifically attributable, the moment you come across this term specific,
Yeah.
It is directly attributable.
Yes.
Once it is directly attributable, then it becomes direct. There is absolutely no ambiguity there. So, you will have instances where they say specific design, specific machinery, specific plant, or specific, tools have been hired, taken on rent. So once they say specific, that means, see, you have to look at specific and non-specific from, a different angle. If there is a factory and this factory is making only one type of product, then there is nothing specific to that product. In fact, everything is for that product. So there it will be classified as overhead. But if the factory is making, let's say, 10 different products, but one particular product requires a special type of machinery, the cost of that machinery becomes directly attributable to that product and it will go as direct expenses. So, that ways we will have to understand. So
Yeah.
specific.
Yes, sir. Like, drawing and designing department cost also comes under factory overhead and all of that.
Correct. Now, drawing
Yeah.
and designing. When do you draw and design? Do you do it for each unit?
No. Yeah, yeah, of course we do know.
For each unit?
No, no, for each type of product.
Correct. So that is where you need to understand. So if there is a single product factory, then this drawing and design becomes kind of a overhead for that. And usually, when you talk about drawing and design, or when you talk about R&D, these are the costs which are incurred before the start of the production, and these are to be
Yes, yes.
absorbed on the basis of every unit that we are making.
Yeah.
So amortized cost. So again, this is amortization. It needs to be absorbed. So these are all going to be kind of overheads.
Yes, sir. Like, suppose like amortized costs on tooling and all, no? Like, while I was doing the question, I was getting a confusion whether it should form factory overhead or it should be a like production overhead. Suppose like in the exam they give the new adjustment, then on what basis we
So
should
if you come across a new adjustment and if you are having a doubt in your mind,
Yes.
best and the most reliable thing to do is to write an assumption. So let's say there is amortized cost given or design and development cost given, and you are confused that whether it should go as a part of the direct expenses or as a part of the.
Factory overhead.
So you have to write a suitable note saying design and development cost. It is assumed that it is specifically attributable and therefore taken under direct expense. So you use that word specifically attributable in your assumption. Game over.
Yeah. Okay.
And
Okay.
also, it doesn't end there. You have to say, in case if it is not specifically attributable, then we have to consider it as a part of the
Yeah.
overheads, and the computation may change accordingly. You need not recompute, but you have to make the examiner aware that look, I know both the treatments,
Yes. Yes.
but there is ambiguity in the question. I am solving this particular thing on basis of this assumption.
Yeah. Yeah.
So keeping that in mind, everything else will fall in place.
Yes. Sir, like in case of new adjustment comes, we can sometimes use this rule, no? Whenever it is specific, it can be attributable to the direct expenses.
Definitely.
Otherwise, yeah. Okay. Sir.
Right. Then
Okay, sir.
go to the next chapter, which is your cost accounting systems. So cost accounting, basically we are recording, just like your financial accounting and cost accounting, we are recording for all the cost. We are kind of keeping a record. So there are two ways to maintain this: integral system and non-integral. Integral meaning accounts and finance plus costing, both we are putting together. Non-integral, accounts and finance, we are keeping it separate. Costing, we are keeping it separate. Now, what is the difference? When we are selling goods, let us say, what is the normal accounting entry that we pass? We say sundry debtor, or that customer particular one debit, or if we are selling it through payment, cash, bank, etc., we debit that, we credit sales. In financial accounting, if we were doing integral system, we would do the same thing. We will maintain party-wise ledgers, customer-wise ledgers, and we will keep a track of what is receivable, what is outstanding, etc. But if we are doing non-integral accounting, what we are saying is, look, the costing department has nothing to do with finance and accounts. I don't care whether money received, not received, from whom we have to recover, what is the outstanding, etc. We don't care. We only know that we have produced, we have sold. So if we are keeping that distinction, we are going to call it as non-integral accounting. If we are not keeping that distinction, maintaining everything jointly, we call it as integral accounting. But sir, basics of accounting, we were said every debit should have a equal and opposite credit. So if you are not going to maintain those items, then how are we going to complete our journal entry? How are we going to pass the accounting entry? How will we have debit and credit? That is where we have this wonderful account, which is your balancing account, the residual account. And what is that account? It is the cost control ledger, cost ledger control account, sometimes also called as GLA, account.
General ledger adjustment.
Correct. So this is the account which is made just to complete the double entry. So that is the only difference between integral and non-integral. And other than that, it's just the flow of the items that is going to happen. So whenever we buy material under the non-integral, we will debit the material control account, the general ledger adjustment. If we were maintaining integral, we will debit the material control account and credit the vendor, the creditor or the payable or the payment. So that is the only distinction. So here the idea is irrigate the cost, you take it to the relevant ledger. So you will have material control account. If you are making payment of wages, wage control account. If you are incurring overhead control account, and so on and so forth. And from there, as the goods move, as the production process moves, we are going to transfer it to the relevant account. So from these accounts, it will go to WIP. Once the goods are completed, it will go to FG. Once the goods are, sold, it goes to cost of goods sold. From their cost of sales account, and then selling and distribution. So this exactly replicates your cost sheet. So whatever we are doing stepwise in a cost sheet, those ledger accounts are being opened, and the goods, the cost is going to move along with the goods, and ultimately going to go into the costing P&L. So any specific doubts that we have in this, we can address it. Then one small topic which is also there along with this is your single plan and partial plan. See, the single plan and partial plan basically, becomes relevant when we are doing standard costing. These are more from a cost control perspective. Now, what is the single plan and what is this partial plan? See, when we are doing standard costing, we are going to do variance analysis. We are going to identify variances. We are going to identify the deviations from the standard. We are going to compare the standards and the actuals and calculate the variance, and we will find out which department, which person, which particular responsibility center is responsible for the variance, and we will take accountability, we will take corrective action. Now the single plan says you calculate the variances at source, as and when transactions are happening. On each transaction you calculate. That is a single plan. Partial plan says let's do this only at the end of the period. Let us not do variance computation each entry by entry. Let's say if I purchase the raw material 100 times, I will account for material price variance 100 times in a single plan. But partial plan says we will not do all of that. We don't have that much time. We will sit at the end of the period. We will do computation only once. We will not do entry by entry. So that is the difference between single plan and partial plan. Now, see, along with this, when we are doing integral, non-integral, if we are maintaining integral, cost accounts, that means we have only one set of accounts. Once there is only one set of accounts, there is no need for us to do reconciliation. But if we are maintaining two set of accounts, one under accounts and finance, one under costing, there might be cases where the profits, are different for both of them. If we have different profit numbers, obviously management needs clarity. That is where we will have need for reconciliation. All right. So there will be, a reconciliation that we will have to do between accounting and financial profits and costing P&L. And what are the reasons for differences? The reasons for differences are broadly two, or rather we can say three. One is financial nature expenses. For example, bad debts. Bad debts you will account in finance. You will not account in costing. So such adjustments we will have to do. Second is your overheads. In finance, whatever we are incurring, we are going to write. But in costing, we will have the concept of recovery on the basis of estimates. We will have under absorption, over absorption. So that under absorption, over absorption, we will have to adjust. And third, there can be a case where, there is a difference in valuation of closing stock. Maybe because of the method that is being used, or maybe because of the over absorption, under absorption. So that adjustment for difference in valuation of closing stocks we'll have to do in order to arrive at the reconciled profits. So that is as far, as the key things in cost accounting that we need to look at. Then the next chapter is unit and batch costing. See, this I feel is the most simplest of all the chapters that is available. Unit costing is nothing but, a simplified version of cost sheet. They are going to give you details of all the cost that is being incurred, add up all the cost, divide by the number of units, you get what is the unit cost. As simple as that. There can be circumstances, for example, pharma industry, where they make units in a batch. It is not possible for them to make only one Dolo 650. If they have to make Dolo 650 tablets, they have to do certain quantity, maybe let's say 10,000 or 1 lakh units or 2 lakh units. So they have to produce only in batch. So where production is not in unit. See, cars, bikes, etc., they produce per unit. Each car, 1 car, 2 car, 3 car, 10 cars. But if they are doing medicines, tablets, they have to do it in batches. So when they are doing in batches, we accumulate all the cost for the batch and then divide by the units in the batch. That is the batch costing method. So essentially, these are two simple topics where we just add up the line items of cost and divide. What additionally we have to learn or understand in batch costing is the economic batch quantity. Now, economic batch quantity concept is exactly similar to your EOQ. No difference. Same concept, same principle. So you might have you may come across questions where they ask you to calculate what is the economic batch quantity, which will be 2 under root 2 AO by C, annual requirement, setup cost per batch, which is equivalent to your ordering cost, and then you have carrying cost per unit per annum. So you calculate this EOQ, and then we will have questions where they say, okay, assume EOQ is 1000, the economic batch quantity is 1000. The question will say, okay, the management has decided to make only 500 units in one batch. Obviously, if they are deviating from the economic batch quantity, they are going to incur additional costs. So the question will say how much extra money they are spending, how much money they are going to save if they shift from existing 500 policy to the economic batch quantity. So that computation of savings we will have to do and kind of give them. So those kind of questions we are going to have here. Any specific queries that we have from students in this topic? All right. So one thing which I want to draw attention of students is whichever topic you take, the fundamental principle is always going to remain same as far as abnormal items are concerned or losses are concerned. Any loss due to normal reasons will always be absorbed by the good production. So it will be charged to the entire output. It will be charged to the good units. But loss due to abnormal reasons will always go to costing PN. So whether it is job costing, batch costing, unit costing, process costing, or whatever type of costing that we do, anything abnormal goes to costing PNL. My good units are never going to absorb that. Then the last topic that we are going to look at is job and batch. Again, see, job costing is an extension of unit costing and batch costing only. Instead of accumulating cost per unit or accumulating the cost information per batch, we will accumulate it per job. So if you are receiving one specific job, we will make a cost sheet for that job, identify all the costs that are directly attributable to that job, and arrive at the costing. So add up all the cost, that becomes the cost for that particular job. I see absolutely no new additions or new complications for this topic, job costing. Now the last topic is contract costing. in a way, contract costing is nothing but job costing. Some important terms that we need to understand, with reference to contract costing. So what are those important new terms that we are going to, look at when we talk about contract costing? Those important terms are work in progress. First one. Now, what is work in progress? See, contracts by their very nature, for example, construction of a building, it is not going to get completed maybe in one reporting period. It may extend to 2 or 3 periods. So that is where we, kind of keep a tab of what is the work in progress. So we have cost incurred over multiple periods. Revenue also have to be recognized over multiple periods. So work in progress is that work which is, still in progress and not completed. But here now work in progress can be divided into two. Something that is certified and something that is uncertified. All right. See, when someone is giving us a contract, they will give us a contract for a contract value. Let's say the contract value is 10 lakhs. Now, I am going to spend this money over 2-3 years. As a contractor who is doing the execution, I cannot wait till the end of the 3 years to receive money. I need money in installments. I need money time to time to, from time to time to incur my expenses. So that is where we say, okay, there will be an expert, an independent surveyor, an architect, or someone deployed from the contractee side who will certify how much work is complete. If let us say the architect is certifying 50% of work is done, that means how much of contract value I have completed? 5 lakh contract value worth of work I have completed. So this 5 lakh will become my value of work certified. Value of work certified. All right, 5 lakh. How did we get this 5 lakh? 10 lakhs into 50%. That becomes the value of the work certified. Now, I have to get money for this value of the work certified. But usually what happens? The person, the contractee who has given me the contract, given us the contract, is not going to pay the entire 5 lakh. Why? See, though it is certified, but it is still not complete in all aspects. There is some work that is all, to be done, still to be done. So usually the contracts have something called as retention clause. The contract may have a clause which says, okay, we are going to release only 80% of the value of the work that is certified as progress payment. Rest 20% we are going to retain, which we call it as retention money. Will it be retained permanently? No, it will be given maybe, at the end of the contract, or maybe in some cases 1 or 2 or even 5 years after the contract, depending upon the terms and conditions of the contract. So that retention money gets deducted. So we have the value of the work certified. Now friends, it's important to understand that there is a difference between the term value and cost. What is the difference? Value of the work is the revenue side. Cost of the work is the expenditure side. Now, when the contract is for 10 lakhs and 50% is certified, that means 5 lakh worth of contract is certified. That 5 lakh is the value of the work certified. But in order to complete this 5 lakh, I may not have incurred 5 lakh. I may have incurred maybe 3.5 lakhs or 4 lakh or 4.5 lakh. So the money which I am spending, that is the cost of the work certified. So basically the difference between the value of work certified and cost of work certified is going to be a notional profit that gets recognized year on year. So mathematically talking, value of work certified is value of contract into work certified percentage. Cost of work certified, okay, please understand this very carefully, is the total cost of work that we have done till date, whatever total money that we have spent, minus what is the cost of work that is not certified. So if I take the total cost, from that, if I deduct the cost of the work that is not certified, balancing figure is going to be the value of the work certified. And obviously, if we are having some closing stock of material and some plant at site, etc., when we transfer to the contract, we debit it. So the closing value, we have to take it as a closing stock. We have to credit it. So that reduction also we will do. Then what is the cost of work certified? Is the other way around. You take the total cost. From there, you deduct the cost of work certified. You arrive at the uncertified. So see, in the question, they have to give one of the two. They have to give either the cost of work certified or they have to give cost of work uncertified. And then the balancing figure we'll have to find out. Now, in reality, what will happen is even this cost of work certified or work uncertified, a technical evaluation will be done and it will be arrived at. But as far as examination is concerned, they have to kind of give us that information. Progress payment, it is nothing but, as we discussed, value of work certified minus retention money. So value of work certified minus retention money is the total money that I have to receive minus whatever they have already paid till date. Balance will become the progress payment that we have to receive during this period. Retention money is the money which they are going to retain to have a cushion against any defective or undesirable work. The contractee upholds some money payable to the contractor. Who is a contractee? The one who is giving the contract. Contractor, one who is taking the contract. This security money is upheld by the contractee is known as the retention money. See, towards the end, if any deficiency is noticed or some rectification is to be done, the amount will be adjusted against this. So this is more like a safeguard. Notional profit. So notional profit, as we discussed, is the value of the work certified minus the cost of the work certified. And how do we arrive at the cost of the work certified? Total cost till date minus cost of work not certified. So, that is how we will be looking at the contract costing. Then in some cases, there are contracts where cost plus costing is given. See, recently after COVID, what has happened is cost of raw material has increased almost by 50, 60, 70% in some cases. Imagine if someone had taken a contract maybe 2 years back for 10 lakhs, estimating that the cost is going to be 9 lakhs and estimating that they are going to make a profit of 1 lakh. But due to unavoidable circumstances, the cost has increased by 70, 80%. Maybe 9 lakhs is now going to become 15 lakhs. If this escalation clause or cost plus contract, then the contractor will go in a loss. So usually they do, have a escalation clause for long contracts, which will safeguard the contractor and of course the project also. So if I typically look at a, contract account, what we will do is for each contract, we'll open a specific, T account, ledger account. All the items of cost, we are going to debit. So material issued, wages, foreman salary, machine issued, supervisor salary, admin cost, etc. Whatever items of cost are there, we will debit. What we are going to credit with the closing material in hand, closing value of work, and then arrive at something called as works cost. So this is the total cost of the work done. So that we will take it, as a carry forward number. This is the total cost which we have incurred on the contract during this period. We will credit value of the work certified. We will credit cost of work uncertified. So basically from the total cost, if I deduct the cost of work uncertified, what we are going to get? We are going to get the cost of the work certified. So in short, what will happen? We will have value of work certified on the credit side and the net cost, which is the cost of the work certified. Balance will come as the notional profit, which will be a costing PL. So again, it's a simple, straightforward kind of topic. Any specific doubts you have, we can address that. And with this kind of whatever I wanted to throw light on as a part of the revision, I have done that. So students, if you want to ask any kind of specific doubts, we can address that. Otherwise, then I will hand over the entire session to Sriram, and we can then conclude.
Okay, guys, thanks a lot for joining, and we hope that we will. I think the next session we've scheduled it in a week or 10 days, right?
That's right.
Yeah, so we'll inform you 3 days in advance at least, and we will let you know, and then we can join again. Okay.
Thank
Sir,
you.
it would be helpful if you could send me that recorded, because like while I was listening to this live session, there was some construction activities which was going in.
We'll get, you drop an email to support, we will get back.
Yeah, yeah. Okay, okay, sir.
Okay. Okay. Thanks a lot, guys. Thanks a lot.